JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 14th of October 2020, so yeah, welcome everyone. Welcome to this Wednesday's morning session where we're gonna have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So you guys feel free to visit us here on jfdbank.com and click on the research tab right there on the top, so it'll take you to this page, which I believe you can find it useful. Now, jumping into the charts, the first one I want to pick up here is on Nikkei, but previously I talked a lot about this level right here, this 23,580 zone, but to be honest, looking at all this picture, we need to probably clear up the chart here a little bit and start fresh, because that level got violated a few times and didn't really kind of prove to do anything. So well, certainly, and of course, unfortunately, that sometimes happens. So what I'll look at here is the overall picture for now. Of course, what I could start off here is potentially drawing this upside support line taken from the low of the 31st of July. Now, excuse me, don't get me wrong, I mean, it could be a bit tentative one, but nevertheless, I'm going to keep that on the chart for now. On the other side as well, what I'll do here is I'll draw another tentative line. This one's going to be taking the highs here. Will be taking the highs of the tops here of these recent tops, and that's drawn from the high of the 9th of June. So in other words, probably we could be getting ourselves here a potential rising wedge pattern, but of course that's a bit too early to talk about that, because if we're looking at something like this, then of course according to all the TA rules, these tend to break to the downside, but we would first need to see a break of this this lower side of the of this potential potential rising wedge pattern, and then yes, of course, further declines here could be possible. But let me just quickly grab this line. So in other words, keep your eyes on this short-term upside line taken from the low, the 31st of July, and of course on this little level right here, the low of the 7th of October, marked by the marked near the 23,272 zone. So a nice good drop below this could, yep, in a way lead to some further declines basically. But again, for now, we're going to be very careful here, and we'll keep an eye on other indices as well, because here Nikkei so far is performing okay-ish. However, its Chinese counterpart here is currently trading in the red, but I'll get to that one first. So given the proximity of Nikkei to this line here, drawn from the high of the 9th of June, in order to maybe get a little bit more excited with the upside, probably now at this point I would prefer to wait for a push above the the current highest point of October near the 23,725 zone. A nice good pop above it may, first of all, would confirm a forthcoming higher high and may clear the path towards even higher levels. But again, still be very careful of this upper side of the rising wedge, if it, of course, if it proves to be one, because for that, as I said, we need to see a confirmation break below this upside support line taken from below the 31st of August. So in other words, guys, for now the only thing is we can do is maybe play the waiting game here and try to pick some key support and resistance levels in order to be on the safe side. Now jumping into Shanghai Composite, as I mentioned a little bit earlier, the index today is trading in the red. So yesterday I talked about this level here, the 3,350 territory, because what I was saying that if the index remains above this territory, then there's a good chance we could see this one pushing higher again. We see this index pushing higher, but as you can see today we're trading slightly in the red. Don't get me wrong, we still have around 50 minutes left of trading here on this index, so anything can happen. If it somehow manages to climb back above this 3,350 territory, then yep, it could show that the bulls are not really willing to give up yet. Now if it stays below this area, we could see maybe a bit more declines here, maybe not severe ones, but there could be a bit of a move lower here, and in a way this could be classed as a possible correction, because if, for example, now maybe I'm getting a bit ahead of myself, but if we see this one drifting, let's say tomorrow, drifting lower again, and ending the day somewhere around here, just still slightly above this 21-day EMA shown as the yellow line, then we could be getting ourselves a possible bullish flag here, with a nice pole here being this the 12th of October candle, and then yep, a small little decline here could be that little flag, that bullish flag, and in that case, yep, this could lead to another uprise. But to be a little bit more on the safe side, you could wait for another pop above this 3,350 territory and then aim for higher levels. In terms of the downside on this one, well, of course, previously I talked about this downside line, but to be honest, I'm going to get rid of it now and mainly focus on some support levels here. So one of which is this one right here, the high of the 9th of October near the 3,280 zone, and a nice good drop below this area may open the door towards lower areas, so keep your eyes on that one, and then yes, of course, we'll take it from there. But again, for now, guys, keep your eyes on this hurdle here, this 3,280. If we get a nice drop below this, then yes, lower levels here could be met within this range, because don't forget that this is what I talked about previously, that so far the index seems to be running around here in this range, roughly between the 3,181 zone and the 3,456 territory. Now jumping into the German DAX, and the index yesterday closed in the red. So of course, what I was mentioning yesterday, guys, in my morning video and then my trader's tea time, that if it falls back below that 13,116 territory that I mentioned in the morning, then yes, there could be a possibility to see a further decline here. It did happen exactly that. So yesterday in my trader's tea time, I kind of changed a few levels here. Now, in order to consider the upside, I would prefer to wait for a push up of the current highest point of this week near the 13,150, 1,300 and sorry, not the 1,000, 13,151 zone right here. Now, looking at the cash index and where the price is currently sitting at, we can see that the price is sitting around, just floating around that psychological 13,000 zone. So it's just basically near this hurdle here near the high of the 21st of September. So if we get a further move below this 13,000 zone, then yes, I'll aim for some lower levels. Initially, I'll target this 21-day EMA, but slightly below that, we do have this short-term upside support line taken from the low to 25th of September. Although it's a little bit tentative, nevertheless, it could still provide a bit of support. So that's why, yes, if we get a further move below that 13,000 territory, yes, we could consider a bit of a decline, but as long as the price remains above this upside line, this decline could be seen as a temporary correction before another leg of buying. So let me just kind of visualize this, what I'm talking about here. So basically something like this here could be possible, and of course if we're looking for some downside here, well, we need that confirmation break, ideally a daily close below this upside line, and then yes, lower levels here could be met. Now jumping into another index, which is the dollar index this time, and you can see that this is the reversal that we're having now. The dollar index lately is a little bit difficult to predict, to be honest. Very heavily news driven, of course, so it kind of acting as a bit of a safe haven here. So yesterday what I was talking about was that given that we had already a nice drop here below this 93.37 territory, there was a chance to see a bit of a further decline here towards the 92.79 zone here, which as you can see here acted as a very nice area of support, but the index didn't really quite reach that area. It decided to reverse earlier and made its way back to this 21-day EMA where it's currently stuck at. Now of course, now all this kind of movement, all this activity increases its chances of potentially testing this downside line taken from the high of the 23rd of March. And as I mentioned to you previously, guys, that if you want to aim for some higher levels here, then well, a break of this downside line would be needed. For now, it will probably take a bit of a careful and maybe neutral approach, although yes, it does have a chance to travel here towards this downside line. Still, I'll be very careful, and I'll keep an eye on this downside line first. If we get a break of this downside line, yes, wonderful, good news for the buyers. But if it still struggles to overcome it, well, I mean, another round of selling here could be possible. So that's why keep your eyes on the news, guys, and see if we do get any more announcements surrounding the vaccine, because that's the kind of little issue right now, I would say. And this is where we're seeing the kind of the US dollar reacting in a positive way, because it is, like I said, acting as a bit of a safe haven. Now jumping into silver, and silver here declined. Of course, the dollar index rose, so the commodity prices kind of declined a little bit, especially precious metals. So silver moved back down, but as I mentioned to you previously, that as long as it remains above this upside support line, tentative of course, but nevertheless an upside support line drawn from the low of the 24th of September, yes, there is still a chance for the bulls to step in here and drive this one higher. However, now looking at this picture, I would prefer to wait for a pop above the 25.24 level here in order to consider higher levels. If this upside line gets broken, then yes, of course, we'll consider maybe the downside, but me personally, I would prefer to wait for somewhere for a drop below this 22.89 level first, because at the same time the price would be placed below the 100-day EMA here, shown as the green line. Bitcoin is correcting a little bit to the downside. Yesterday it did exactly that. So this week, after finding good resistance near the 11,740 territory, the crypto started drifting lower, and in a way it could drift lower still. But if this 11,185 territory provides good support, And then yes, another push higher could be possible. But if this support zone here fails to provide that, fails to hold the price from moving lower, then yes, of course, a break of it would lead to, or should I say, could lead to a bit of a larger correction to the downside, because don't forget that we're still trading above this short-term upside support line taken from the low, the 8th of September. So in a way, any move towards that upside line still could be seen as a temporary correction before another leg of buying. But again, for now, all eyes are on this 11,185 territory. Jumping into a few pairs now, AUDNZD. I talked about this one yesterday, and basically, as you can see, what I was well. First of all, let's put it this way: what I was saying previously, that if given that we saw this decline, and yesterday when I was covering this pair, we were hanging around here near this downside line, testing it from above, and what I was saying, that if it provides kind of support, then we could see a nice rebound and a push higher. However, I would prefer to wait for a push back above this 1.0851 level first before kind of examining the upside. But this didn't happen. The pair instead drifted further south, and what I was saying, that if the level here, the 1.0771 gets broken, and we see the daily candle remaining below this area, now this kind of increases the chances for a potential further move south. And at the moment, this is exactly what I'm going to be targeting. I'm going to be aiming for this 1.0718 level. That's going to be my first target, and after that we'll see what it wants to do. Then if it wants to rebound, yep, great, but if it wants to continue sliding, then yes, that could be great news for the bears. However, of course, we'll keep a close eye on it today, because if by any chance this somehow travels back above this downside line again, well, I mean, first of all, we'll get rid of this downside line, and we'll start considering something else. What you can also consider something like this, of course. Let me just show you what I'm talking about. So this upside support line, now it's a bit of a tentative one, short-term upside support line taken from the low, the 25th of September. So in a way, the pair could recover some of its losses made yesterday, find resistance here, and then decline lower. So that's why probably if you're looking for some downside, the safe game here, the safer game here could be to wait for a drop below this yesterday's low near the 1.0752 territory, roughly around here, because as you can see today, the pair found support exactly there. So a nice good drop below this area would confirm a forthcoming lower low, and yep, further declines here could be possible. So but we're not excluding, like I said, a possibility for this one to maybe go in higher a little bit, correct higher, test the crossroads between these two lines, and then drift back down. So that's why the upside scenario for me still remains from around here, somewhere near this 1.0851. USDCHF. Now again, the dollar index the dollar index rose. The pair here, USDCHF, also made a move higher, but it's currently finding good resistance near this 21-day EMA. So as I've mentioned to you guys previously, that my target was this 0.9073 territory, which, as you can see, acted as a very nice area of support recently. We just fell shy a few pips of reaching that zone, and then kind of the pair reversed higher. I mean, these things happen, so not always kind of it picks up on your levels, but the more important thing right now is that we are at a tricky spot again. If we want to look at some higher levels, probably wait for a drop, not a drop, but a push above the 0.9197 territory right here, marked by the high of the 8th of October. Then the pair could in a way go back to potentially aiming for this downside line taken from the high of the 23rd of March, and then we would take it from there. but if this area here continues to provide resistance, this 21-day EMA together with the 0.9163 zone continues to provide all this this area is still acting as a good resistance territory. Another slide here could be possible, but again, at the moment, probably I'll take a bit of a neutral stand, and I'll wait for a more clear indication of where it wants to go. GBPJPY, now look at this beautiful move here for the bears. Yesterday the pair broke below this upside support line taken from the low of the 23rd of September. It also drifted below one of my areas that I talked about previously, this 136.59 zone. What I was saying before, guys, that if we get a drop below this territory, now this is where the excitement for the bears could come in, and further declines here could be possible, because at the same time the pair would be placed below all of its EMAs here on a daily chart. So now my next target is this 135.81 zone. If that is just seen as a temporary obstacle for this pair, then yep, further declines here towards this 135.06 level could be possible. EURGBP, here the pair is moving beautifully to the upside, so everything's working out nicely. So I talked about this pair a lot, and what I was saying, that keep your eyes on this potential falling wedge pattern, which according to all the TA rules tends to be more of a bullish indication. So but I was saying that I cannot really aim for some higher levels until we get a violation of this upper side of the wedge, but preferably the daily candle kind of remaining above this area. Now this is a bit of a different situation here, where the daily candle, as you can see, ended up being very close to this upper side of this pattern, and today we're seeing this daily candle kind of opening, or should I say appearing above this area, and now pushing above this 0.9090 territory right here. So all this is now creating this nice bullish atmosphere. For now, I'm going to take a bit of a bullish approach on this one, and I'm going to aim for higher levels. At least I'll aim for this level right here, the 0.9157, which, as you can see, acted as a very nice area of resistance recently. So for now, guys, yes, that's going to be the game plan. If by any chance this somehow reverses sharply back down and drifts back below inside its pattern, then, well, I mean, this is maybe the bulls are not ready to move this one higher, but yeah, if it starts dropping back below this here, then we abandon the whole kind of bullish case. And finally, EURUSD. So here, of course, the strength of the dollar kind of played in here in this pair, and we saw this one drifting lower and falling below the 21-day EMA. Although it's showing a bit of willingness to move lower, as I mentioned to you guys previously in my videos this week, that yes, if it falls back below this 1.18 territory, I'll take a bit of a neutral stand, because in order to consider, let's say, the downside here in the near term, I would prefer to wait for a drop below this 1.1696 territory first, and then aim for some lower levels, because at the moment, yes, it's back below the 21-day EMA. However, we saw this pair kind of last week, for example, shifting around this 21-day EMA, and didn't really kind of kind of mean much, to be honest. It was just oscillating around this 21-day EMA. So that's why I would prefer to keep an eye on some key support and resistance levels. Now in this case right now, I'm keeping an eye on this 1.1696 territory. A nice good drop below it may open the door towards lower areas. So guys, with the upside, oh, by the way, yes, with the upside, just a quick update, with the upside now, looking at this picture, I would prefer to just to be on a safe side and wait for a pop above this 1.1831 zone. Of course, I'll keep an eye on that 1.18 level itself, but if you're more cautious, then a push above this 1.1831 territory would confirm a forthcoming higher high, and maybe this could open door towards slightly higher levels. But at the moment, I'm examining this potential idea of a possible slide towards the 1.1696 territory, a break of which may open the door for further declines, guys. So so yeah, guys, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys. I really do. Thank you very much for your views, for your likes, and yeah, I hope you have a fantastic trading day today. And if you want to catch me later on, my traders tea time is always 13:15 GMT time. For now, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.